Alright, what's up everybody? Welcome back to the channel. Let's go ahead and discuss Bitcoin. Right now I have this on the weekly time frame. I know the chart is really busy, but just stick with me and I'll explain it. These are all basically the market's levels. They're not mine. I just find higher time frame levels and then I watch price as it navigates through the levels. I have both the 200 simple and the 200 exponential. The simple is going to be your red line, the exponential is the purple. And the same goes for up here. I have the blue 50 and the green 50. One is an EMA, one is a simple. Basically, I have this pulled up because on the 4 hour, we did get a golden cross a long time ago, but we haven't really made any headway on the weekly. The weekly is still structured bullishly. If I put the 21 exponential on here, there's no point to put the 100 on because the 100 is down here. So you can see that the 21 is up here, 50 there, and price is essentially bullish on the weekly as far as structure is concerned. We drop down to the daily time frame. You can see that we did close on Friday a daily back above the 21 EMA. And if I pull up the RSI, you can see that we are back above the 50 on the RSI, but we have not gotten above that 60 spot. 60, being above 60 is generally correlated with a very bullish market. So on the right hand side of the chart, I have all the levels delineated by what they actually are. So for instance, this line up here is June of 2024's open. So that's a monthly open there. August 24's high, August 24 open, Q3 2024 is open. Remember, the higher time frame levels absolutely work a lot better. If we drop down to the 4 hour time frame, you can basically see how these levels work once they come into play. Here, down here is Q4. Oh, sorry, 2024's Q2. This is the low of Q2. So as the 4 hour time frame pushed back down into this level, we were watching to see if this held a support. It did not. Even though this was a nice bounce, the candles after showed that weakness back into the marketplace. So at this point, you probably would not be wanting to take a long, but obviously, depending on where the daily 21 is and all that also goes into the aspect of looking for bullish entries, as we typically only look for bullish entries when the daily time frame is closing dailies at or above the 21 EMA and at or above the 50 on the RSI. That is typically when we are looking for bullish day trade scalps. So here you can see that we did drop below Q2's low and then getting a bullish move. So basically what we've done here is we have a trend line going from the all-time high. Let's go back out to the weekly. Let's discuss these trend lines. You have a trend line coming from the all-time high, and you can see that this upper trend line has halted any weekly advance. Every single time the weekly time frame has gotten up or at this trend line, price dropped back under and was unable to close a weekly above it. So this is the trend line or the upper trend line that is currently holding price. And then the lower edge of this pattern or this formation comes from the low that we made in August when we had this scare from the yen carry trade unwind. And then I just tagged it to this next swing low. So we haven't had a third touch. So this trend line is not yet confirmed a trend line. 2 touches does not make a trend. It takes 3. You need that third touch. And we haven't got there yet. And I don't know if we will, but we will see later on. Going back to the 4 hour time frame, you can see just how effective these levels have been at looking and holding support. You get a flash wick under. This is just to stop out anybody who got long early. Anytime that you're testing one of these major levels, it's good to give it a day, maybe even 2, possibly 3 days to see how price is acting at that level before you just immediately throw risk into the market. Because if you get long here and put your stop under that swing low, you got stopped out there. And then if you tried another long here, on the next 4 hour candle, obviously you were stopped at again. So you would have swallowed 2 losses there, but you would have been right on direction overall, taking entries or being right directionally biased to translate that into profits on the actual account growth or an ascending P&L curve, if you will. It's hard to do because you get so many early entries and, we as humans think that we got to get in right then and there because you may not get another chance. And although that does happen sometimes, the majority of the time is if the level's going to actually hold, you're going to get multiple tests and multiple opportunities. But just look how it blasted through this level here, went up, retested monthly support, which is August's close, I think. We'll check that here in a minute. Tested that level as resistance and then pulled back midpoint here. There is not a higher time frame level here, so that's just going to be like a daily level, maybe even possibly a weekly close. So a new weekly candle opens, you get a push lower to take out the weekly low. So this would have been your weekly low, fresh week open. The first early part of the week, you get a translation lower, and that sets a fresh new weekly low, and then price bounces out of there, comes back in for a retest of support, and goes up, and then holds this area, Q3's 2024 open, as support. Now, we did take this trade inside the Trade Talk community. We did get long, and we did get a small move back out of the area, but once again, we came into contact with that trend line, ultimately holding this level, August 24's high, as support, but then making a lower low and breaking down, and then breaking down, back down to monthly support. This is where we initially found that resistance before we had a couple days of pullback. So it's only fair that once you finally ultimately get the breakout, remember we're looking at this swing high right here, once we ultimately do break out and then get bullish continuation, set in support at a higher low support, and then move away, it's only right and only normal for price to then come right back and test this area once again as support. And you did here, and you can see once again that this support test took multiple days to play out. So let's go back into here on the daily. You can see right here is that move. Here it is to the upside, retest, firmly plants this as resistance, moves lower, and then you get a nice strong bullish day. This would not have been a shortable opportunity because this bullish candle had a lot of momentum closing right below the level. We would have been anticipating price to break out above this, come in, retest demand, boom, there's your breakout, there's your retest. And we did get a lower high here. So up until this point, price ultimately had another push lower. So right now the bears, or people are assuming the bears have control of the market, and I would contest that because since we put in this lower edge here of this overall triangle formation, you're just setting in another higher low. So if we pull back up the moving averages, you can clearly see that now you're back above the daily 21 EMA. Here's your 50, there's your 50 simple, and then here is your 200 EMA. This is the daily time frame. Notice how the 200 simple has acted as resistance here, here, and here. And now we're retesting it again. So this ultimately looks more constructive and it looks more bullish. And if you look at the overall trend here, and this pattern is coming close to a resolution. So your longer time frame levels here can still bounce around in this, but you are getting really close to resolution, whether we break out and fail and then fall out of the bottom edge, or if we hold and then just break out and continue with bullish breakout potential. And of course, that's what we're going to assume because the S&P 500 is breaking out bullishly, setting new all-time high after new all-time high. That is what we call in the business bullish continuation. And anytime you're seeing bullish continuation, you're going to bang your head against the wall trying to take short trades when that is happening. So it's best to only look for long opportunities at supports, at well-known and well-tested supports. And we'll go look at the S&P 500 real quick. But ultimately, you are looking more bullishly structured on Bitcoin than bearish right now. The bears, ever since that sell-off, right? This was a fluke. This happened because your yen trade unwind scare. So this is what we would consider to be not necessarily a black swan event, but a one-off event for the year. And that cemented this low. And since then, you have made higher highs. You took out this swing high, you made this higher low, and then this higher high. So right now you are making higher highs and higher lows. Yes, on the near term, it does look more bearish, and people are probably trying to short this, but I think they're on the wrong side of the market overall, and I think that they would be better suited to look for pullbacks into these areas and then look for potential bullish entries instead of bearish entries. But overall, Bitcoin looks really good. We go into the monthly time frame. You can see here on this month, we have 19 days left. So the first week has happened on the monthly expansion, and you set a monthly low. And look where that low came in, right here at what we call support. Remember, bearish closes on any time frame candle, but mostly on the higher time frame, daily, weekly, monthly, quarterly. Your bearish closes are support. Your bullish closes are resistance. You are currently testing resistance after testing support, and there's 19 days left on this candle. All right, so let's go to the S&P 500. I have not made the next week's expected move yet, so let's go ahead and do that. I'm gonna pull up Thinkorswim. I'm gonna bring that over here for you guys on this monitor. Let's go to the trade tab. Friday is going to be the 18th of October. So we're going to go find October 18. That's here. Oh, that's an AM settlement. We want the PM settlement. And that's going to be an expected move of $88. So let's go ahead and pull up our calculator. And we want 58.15 spot 04 plus $88. And that's going to give us our upper edge of next week's expected move. We'll clone this, move it over for next week. And I believe it was 59.03. 59.03. So let's go set that. Coordinates 59.03 spot 04. Boom. And now we have the upper edge of our expected move. We'll clone the weekly open and we'll set that with the actual price of 58.14. Oh, sorry, 58.15.04. And then ultimately our week low expected move. I'd say it's going to be right around that area. So we'll get our calculator again, pull up 58.15 spot 04, and we'll minus $88, and that's going to give us 57.27.04. And there we are. So now we have next week's options expirations, or the expected move, or what the market is pricing in. And to be fair, that is a little bit low, considering if you look down here on the right hand side of the screen at the bottom right, you can see the VIX closed at a $20.45 spot. So that's a high VIX. So obviously the market is pricing in a very muted move for next week. If you notice also in through the last 2 weeks, you traded well within 3 weeks. Actually, the last 1, 2, 3, 4 weeks, you have traded inside the options expected weekly moves. You have not been breaching. See, back here, you did breach with a daily close above, a retest, and then you ended up closing the week out strong here. So you have been confined to staying inside of those weekly expected moves, which is normal and expected in a bull market. Generally, you have less volume in a bull market. And if we look here, we can see that volume is in fact declining as prices are moving higher, advancing. So as we decline in volume and price advance, structurally speaking, that's bullish. That is not bearish. That is bullish. And here was your all-time high set 2 weeks ago, actually 3 weeks ago now, but set here on this day, Thursday, September the 26th, your all-time high was 57.67. We broke out Wednesday. We had a small inside day here. So what would we be looking for typically for the Friday? We would be looking for bullish expansions, and that's exactly how we traded this yesterday. This was an inside day on a fresh all-time high breakout, a strong breakout. It wasn't a massive candle, but the close was near the high of day. That means you were closed closed on highs. You closed strong on the day. Next day, an inside candle. And then the very next day, bullish breakout. So that's your 3-bar candle formation. And we got exactly what we were expecting. All right, Tesla, we're going to pull that up real quick because a lot of people were thinking that Tesla was going to break out. We're getting late in the year here. So here is where 2024 starts. This is your yearly opening range. So you did have an expansion lower, you did set a yearly low, and you then came up and you set a fresh yearly high here as your yearly high was right there at around 251. So we came up, we set a fresh yearly high, then we retraced, and then we came back up and we set a lower high, but we rejected the yearly opening range once again. We don't want to see this type of price action around the yearly open, especially with only 2 months to go for the yearly close, right? Because this shows us inherent weakness at the yearly open. So if Tesla is going to close 2024 bullish or close it up, it needs to get above this level and it needs to be able to hold and then get bullish continuation from there. And it's not looking like it's going to here, but we do have a major level here being August's close, and we gapped down, we retested that, but we closed still bearish on the day and close to the lows. So this looks weaker than it looks strong, right? So I wouldn't be wanting to get long here, expecting support to hold just yet, because we could gap down Monday and open down here. So we're going to give this 2 or 3 days to see if 214.11 can hold as daily support, and we'll then potentially look for bullish entries, even though we're bearish on the year, and we did drop back down to below the 50 on the RSI. So it did try to hold there, but the buyers were just not able to give that a go, and that's why you had such a significant gap down. As all these stops got smoked, price continued to go lower. So as of right now, the bears are in control of Tesla. Let's go up and look at Nike and Intel, and then we'll pull up Copart as we exited Copart. Nike is one of the 3 trades that I pointed out last week. We were looking for bullish continuation. So far, we got it, but then it rolled back over. So we're kind of still seeing what's going to happen here. Ultimately, it could get back above 82.15, which is Monday's open. This was the bear trap as you broke down below the trend line, and we broke down below the level that we were watching to hold as support, being Q2 of 2018 swing high. And we did hold that level of support. We got higher, but we came back in for a retest. And Friday, we tested even lower, not quite retesting that level of support, but we did retest the open of, what is this day here? Wednesday. So we got really close to testing Wednesday's open. And then for the remainder of the day, you traded up. Here's Friday. We set that low. And then you can see here that ultimately the bulls did get back involved here, and you did close above it. Post-market, you dropped right back under it. So we'll see if this acts as resistance. We're no longer in the trade. We're going to give it a day or two to see if it can pop back over, because I'm not really concerned. I think most analysts have Nike up in the $90 area range, putting that up in here. So even if we can't, or even though we're not in the trade any longer, if we can enter again at 82.50 and get bullish continuation, I'll take that. That'd be a $10 move potentially on the options trade. Let's go look at Copart, as this trade was a phenomenal trade. I ultimately closed the trade out on this day roughly around $55. Once price broke above 55, I said, yeah, that's probably about all the juice you're going to squeeze out of this lemon, as I entered it down in this price range here in the 49.50 area, because that was a strike call I bought. So I entered it somewhere between $49.50 and $50. I don't know exactly where in there, but somewhere in there. And then ended up closing it up here. So I captured this entire move on that trade. Phenomenal trade. This trade went a long way into helping the small account. All right, but we are now out of this trade. We're going to allow this to pull back, find support at one of these levels, and then we'll potentially look for bullish continuation. as Copart is generally a very good investing stock as it generally trades up. And then finally, Intel, still holding the Intel trade. Intel has had a rough couple of years. Here we go over here, and we finally did get this close above daily res. The next area that we're looking for resistance on Intel will be 2462, as that's 2012's open. That's a yearly open for 2012. That needs to be a yellow line. So this is the next area of potential resistance. And you can see that price already tested that as resistance and failed. Found support at Q3 2013's low. Once again, this is not my level. I did not invent this level. The market did all the way back in 2013. And if you don't think that these levels don't work even from years back, look how this level has acted as resistance, gave you a bull trap right here, breaking out above, closing above, and then immediately gapping down and going back down to support and setting a bear trap. This was a lower close than this close, so that was a bear trap. But notice how it took 1, 2, 3 days before ultimately breaking up and out of this region and going up to 2012's open, finding resistance there on the dot. Here's your pullback to support, finding support at an old resistance level here, which is absolutely beautiful. Stocks trading like this are phenomenal. It gives you awesome opportunities to look for bullish entries whenever you're breaking out, making a fresh high, making higher lows, coming back in, retesting that support zone, get long, boom, up she goes. So we'll see if this thing can get going, get any kind of steam. There is a gap to fill all the way up at 28. Almost $29. You guys have a fantastic rest of your day. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.